let's talk about GST withholding. All right, so since GST withholding appeared in the July 2018 update of REIQ contracts, most professionals haven't taken the time to understand exactly what it means and why it was implemented. Well, we've finally decided to take a deep dive into GST withholding in Queensland contracts and explain everything that you need to know. Alright, so the purpose of GST withholding is to oblige the GST that is owing on a property contract dated from 1 July 2018 to be collected and paid directly to the ATO as a part of the settlement process. Please note here that the GST withholding is not an additional amount on top of the purchase price. Instead, it comes out of the sale proceeds that is paid by the vendor. Alright, so who is eligible? The sale of residential or potential residential land that involves subdivision or new residential land, i.e. development, will likely require GST withholding. There is significant confusion surrounding whether a property is eligible for GST withholding. The GST withholding requirement is only applicable when the sale of residential land is a taxable supply for GST purposes. So, the supply of subdivided residential land is a taxable supply when the supply is made via an enterprise. For example, property developer or an entity that's registered or required to be registered for GST. Your typical mum and dad purchase or sale will not likely attract GST withholding obligations. If anyone is unsure, we suggest that the clients speak directly with their accountants to find out this answer. Alright, so why GST withholding? GST withholding laws changed in 2018 to stop phoenixing. Phoenixing is a process where a company that sells properties as their business, for example a developer, winds up the business prior to paying the GST owing. By shifting the burden to the purchaser to collect the GST owing, the ATO gets paid and the revenue is not lost. Vendor responsibilities. The vendor must give the purchaser written notice prior to settlement outlining, amongst other things, the amount that is to be withheld. This information is sent to the purchaser's solicitors so they can arrange for the payment to be made as a part of the settlement process. Normally, this amount is 1/11 of the contract price or 7% if the margin scheme applies. The vendor will obtain the correct formula and amounts from their accountant. Failure to comply will attract a maximum penalty of $21,000 for individuals and $105,000 for companies. Purchaser responsibilities. The purchaser must notify the Commissioner for Taxation of the amount that is required to be withheld via a Form 1. This occurs prior to settlement. Then, a Form 2 is required at the time of payment of the GST withholding. This process is organised by the purchaser's solicitors. This Form 2 process occurs usually directly after settlement. The purchaser must also advise if they are registered for GST and acquiring the property for a creditable purpose, which means to conduct business. An example of a creditable purpose would be a builder purchasing land from a developer to build and resell. Alright, now penalties for purchasers. A purchaser who fails to withhold or provide a bank check made payable to the Commissioner when it's obliged is liable for an administrative penalty equal to the amount that should have been withheld plus interest. Hopefully this short blog helped to understand a bit more about what GST withholding is, when it applies, and how to deal with it. The lesson to take away is if you're unsure, get the vendor or purchaser's accountant to give the answer. Thank you everybody. I just wanted to say, please keep the suggestions for topics coming. I'm loving making these videos. We're starting to get some really good traction and I look forward to chatting to you on the next one.